We get down to business now with Cosmo Macero. We do it every Thursday. He's from O'Neill & Associates. Let's get right to it. Amazon sells more e-books, Cosmo, than print books, and I'm holding a print book in my hand, a dinosaur in the making right here, right?
That's right. Obsolete, Mark. That's the word. You know, Amazon's been selling print books for 15 years and Kindle books for 4 years. Well, now they're selling more Kindle books over that time. For every 100 print books they sell, they're selling 105 Kindles. That technology has been adopted pretty quick, and people are willing to compromise on the tradition and the nostalgia of having that print book for this technology.
I don't know. I still like holding it. I still like turning the pages. That's me, though. I guess I'm in the minority.
There's no real substitute for falling asleep in your favorite easy chair with a nice big fat book.
That's right.
But the Kindle has really moved, and really throughout the industry, e-books, electronic books are being adopted across all platforms.
Without question, and the kids tomorrow are going to be reading it online as opposed to through the pages. Let's talk about class divides. Let's talk about maybe the haves and the have-nots, if you will. People who have more money, they tend to keep buying products, especially the higher-end variety. I'm thinking companies like Coach. They're doing very well right now. People are starting to get a little more money back, but not everyone is able to do that, right?
You said it, Mark. There's a class divide in your retail stores. High-end products, luxury products, the wealthy are spending more on those again. But everyone else on the margins, people in the middle class and below, they're having a tough time paying for basics like groceries and clothing. In fact, those prices are going up. Yet at the high end, the wealthy are starting to spend again on Hermes and Kate Spade and all those luxury products. It's because they're not impacted in the same way on everyday necessities like a lot of folks are.
And thinking about the future as well, as we talked about the Kindle just a moment ago, I want to talk about LinkedIn finally today, because LinkedIn, for those who may not be aware, is a social networking site really for people you know in your business. You can kind of do business with them, and they had an initial public offering, which meant people could go out and buy stock in the company. Went on today for $45 a share. At one point, that was at $122, and I think it finished in the 90s.
That's right. The stock more than doubled. LinkedIn's kind of the social media site for grown-ups. So it's business to business, the one you can have on your desktop at work without a problem, because there's a lot of business-to-business applications. The big news here is it's a real prognosticator for the granddaddy of them all, that IPO we're going to see out of Facebook down the road. Not a lot of impact here on the end user today. It just means we know the social media space means big, big money on the open market.
And it is here to stay, that's for sure. It has a bright future, not going away anytime soon.
That's absolutely certain. And LinkedIn, again, a real important business-to-business application and big business today for them on Wall Street.
Cosmo Macero, O'Neill & Associates. Always appreciate getting down to business with you. Thanks, Cosmo.